Howdy, Jacob here. Today we're looking at the company Camtek. They are in the semiconductors industry, 6.2 billion market cap on 6 billion enterprise value. Very impressive growth, absolutely immense in 2021, but honestly, it's a cyclical business and we do see that here, minus 21% and as high as 73% year-over-year revenue growth. Always, at least the last 7 years, very having a very solid return on invested capital. That's great to see. Margins of over 20% on the operating side is very awesome. That's very positive. Balance sheet has about 350 million cash-like products with less than that in long-term debt. So we're definitely not concerned with the balance sheet. Cash flow statement shows very low capex with a good production of cash from operations. They do issue shares through stock-based compensation, but a lot of their money is going towards reinvestments. So that's awesome with the rate of return that with the return on invested capital that they have, I would want them to be reinvesting at plus 10% as well. That's going to be a great use of cash for you as the investor to sit in on. But again, everything is the present value, future cash flow, and earnings. Most things are. So let's understand and project what we think the cash flows are going to look like. On the revenue growth side, I believe I heard and read somewhere that semiconductor compound annual growth rate for the next 7 years is going to be double digit. Do I think that's going to hold for them? Based on these figures, it looks like it definitely can. Let's do margins of, let's do 2019 share change. Looks like they do pay a dividend actually. The dividend yield of almost 1%. I don't know why it's not showing up here, but they're with earnings per share of over $1, paying $1.33. Huh. So they're paying dividend with almost all of their earnings per share, with production of 70-80 over there, 70-80 over here. I guess majority of their money is going towards a dividend, not also reinvestment. I guess they did go in debt over here to fund those projects. But yeah, I don't want them to be paying this dividend at all. I'm going to keep it because dividends are very sticky. I don't see them removing that, but I mean, it doesn't leave a whole lot of money left over for reinvestment. That's going to dampen me over here. Let's do a wider range there. Stock-based compensation of 10 million. Really not much. Let's just assume flat. Okay. I guess if I have lower revenue growth, I think at the end of 7 years, they still deserve a premium, but not a 20 PE, I don't think. So, yeah, right now, definitely looks expensive to me. I guess I should have not been surprised with a 72 PE and almost the highest margins they've ever had. So to me, definitely not going to be too angst to go out and get the stock. I'm going to wait and research other companies. Hope you enjoy the video and have a great rest of your day. Thanks.